We're delighted to have Craig Bond with us to provide the opening keynote this morning, ladies and gentlemen. He's from the Barclays Africa Group with ABSA since January of 2013. He's led the Barclays retail and business banking operations across Africa, including the ABSA brand as well. He has over a quarter of a century's experience in leading financial institutions. He's been through Standard Bank, Nedbank, and Investec, and also gained international exposure as CEO of Asia and CEO of Africa as well. We're delighted to have him with us for the opening keynote address. Would you please give a warm Parsa welcome to our local speaker, no pressure, Mr. Craig Bond. Thank you very much indeed.
Morning, everyone. I didn't expect to see Michael Jackson live this morning, so that was a nice surprise. And thanks to Walter. So what I want to chat to you about today is really this digital tide that is pervading our industry. And hopefully, through the next 45 minutes, I'll be able to give you a little bit of how we're trying to navigate it and how I think we as an industry need to navigate it. I'm not talking too much about the regulatory stuff. I think that's implicit in everything we say. But you'll see that there are a couple of trends here. I think that more and more, we're going to have to work together as an industry to make sure that we set standards. I think we're going to have to think abundance in the sense that there's a whole lot of stuff that we're going to compete on for customers, but there's a whole lot of stuff that we need to do together with partners, with third parties, with the associations, and I think that PARSA can be quite a nice conduit for a lot of that driving. You'll also see a message that's not so subtle through my presentation that, the regulatory world is changing radically. And I think, the days of it being, a group of banks, some associations and the regulator have changed. I think there are a whole lot of industry drivers that are going to force us, really to join forces. And I think it's going to be a time of, being quite careful that we all understand what are the things we're going to have to work on together, and then what are the antitrust competitive stuff that we're going to have to do individually to make sure that we remain relevant. I want to just talk a little bit about where did it all start, and the reason for this is just to talk about the rate of change. When I look at what comes through my office and my email every day, a decade ago, 5 years ago, and today, there's some fairly radical stuff happening. I think let's talk a little bit about what's driving all this payment modernization and where is it happening. Is it happening on the rails that we all used to? Is it happening in the model, or is it happening at the front end? I think there's some emerging payment trends that we're all aware of, but they're moving really fast. I want to talk about that. Every single presentation I see from every bank in the world and all the mobile cell phone operators talk about mobile first. So let's just understand, where the innovation's happening and what's going on. The big issue of fraud. I think, more and more, as we move into this digital world, we're opening up some chinks in our armor that, some clever syndicates and people can exploit. I want to talk about that, and then just a couple of conclusions. So I think just in terms of, some of the great minds of our time, for those of you that don't recognize the lady on the end, that's Amelia Earhart. I did have to ask the question myself when the guys helped me put the slides together. I think, what you're seeing is that increasingly all of the disruptors, throughout the ages have focused on a customer need, and actually creating demand in the case of your Zuckerbergs and these sort of guys. But, really, I do think that increasingly when I start looking at what's going on out there, whether it's an Uber, whether it's a Facebook, whether it's a new payment app, whether it's Airbnb, whether it's something that Starbucks is doing in the payment space, it's all about meeting a customer need. And I think that we need to be frank. As banks, we all think we're very customer focused. I'm not sure with all of the legacy that we've got that we've been as good at as understanding customer needs and solving them as many of these guys have. So I don't want to give you guys a history lesson, but I think all that I want to illustrate on this page is that if you have a look at what's going on, banking payments has been around for thousands of years in various forms. From barter, right through to coins, through to the notes, to the creation of credit cards in the 50s. I think that what we're starting to see is that this has been an incredible profit pool. Banks are a big profitable industry across the globe, financial institutions, and more disruptors are saying there's an opportunity for us to come and play in that ecosystem. And so I think if we think that there's a sense of innovation and disruption happening at the moment, watch this space. As I'll show you later, we've got an incubator where we invite fintech startups. Last year we ran a process and we had 250 applicants to join our incubator. And the way the incubator works is we put them through quite a rigorous process, choose the best 10, and then we pay for them to come and live in Cape Town. We put them up in amazing facilities, and we let them free. And at the end of 3 months, they've got to present their solutions to us. And what's interesting is, about 250 last year. If I'm honest with you, most of them were African, and the predominance was South African. And so guess what? We got some really interesting ideas, but there were very few that were truly cutting edge. Almost all of them are working on blockchain. This year, we ran the same process. We had 456 applications from Lithuania, Romania, Russia, Paraguay, Nepal, all over Africa, the UK, Europe, almost every country in Europe, all wanting to come into this incubator. And I'll talk to you a little bit about who we chose. Once again, every single one of them is looking to disrupt a piece of the value chain. But their starting point has got nothing to do with banks. Their starting point is how do we solve a customer need? So I think, the dream of all these guys, and they're generally quite young, although there are a few old boys there as well, sort of MIT professors that have come into the fold and have seen an opportunity. But the starting point is all to create the Uber of some piece of the puzzle. And so, what's been quite astounding to me is sitting down with these guys and talking through some of their models, which are very, very compelling until you start talking about things like what happens if there's a dual transaction? How do you get your money back? And proximity payments, they're all playing in, as you can imagine. And I said, okay, what if you double tap and you get double debited for your purchase at Pick n Pay or Woolworths or ShopRite Checkers? And they say, well, but the customer must deal that with ShopRite Checkers. And I said, well, where does the chargeback come in? Amazingly, don't know what a chargeback is. I haven't thought that stuff through. So I think, all I want to say to you is this thing's moving really fast, but there's still some underlying principles and an underlying model that I think is going to have to prevail going forward. Because I think, increasingly, as convenient as it is, consumers still want some of the protections that we gave them in the old model. I also think we need to be quite clear in this new sort of era that we're entering to separate card and payments. When I look at the card industry, it's prevailed, actually come back very, very strongly over the last 7 or 8 years. And what's interesting is you're starting to see the card associations and the banks, of course, investing heavily in innovation. Something that I think that they were behind the curve, and suddenly you see lots of the fintech acquisitions are being made by the card associations, are being made by banks. Payments, though, is the one where you're seeing most of the investment. So, I'll show you a graph in a few slides' time, just of how this sort of fintech investment is growing. And if you look at most of it, it's in that sort of payment space. And so the question that I think we've got to ask ourselves is, cards, whether they're physical or virtual on your phone, seem to be prevailing. It's, they're not being disintermediated as fast as people expected. People still feel their security in them, and the processes and rails work really, really well. But payments is another piece of the puzzle where everyone's trying to disintermediate the customer experience at the front end. And so, everybody's there. At the end of the day, we've still got a consumer, we've still got a merchant or a business. We still have the basis of a 4-box model, which works really, really well. And so, the guiding principles seem to be there has to be interoperability, within the value chain. And I think, many of these closed-loop systems that we're seeing run short because there just isn't interoperability. So quite sexy in the closed loop, but you can't use it anywhere else. So I think that's first one. I think increasingly, whatever we deliver has to deliver value to all the stakeholders. We know for a fact that, you know, there's a real trend from our retailers and merchants that their margins are being compressed, and one of their big costs is their merchant acquiring costs. Now, having said that, you know, I think increasingly with the pressure on those revenues, there's a huge job for us with the retailers to say, if you did this yourself, please understand the costs, the risks that you would take on, and please understand the real economics of a merchant acquiring business. Not quite as lucrative as you think. And so, you know, I think in this journey that we're on, we're going to have to find value for the end user, the consumer. We're going to have to find value for the merchants. And we're going to still have to run this commercially as banks and card associations and payments providers, whether they're in or outside of the system. So I think that's quite important. Increasingly, you can see that the big pressure is going to come on the cost of providing the service. And so just to lay that thought, and we'll talk a little bit about it further. So I think just talking about what's driving all of this, you know, I think everybody from the consumer to the regulators to the retailer wants lower cost. There's a view that we make too much money out of payments, and that, you know, that pressure is going to be a pressure down to zero. You're eventually going to have to make money somewhere else. I think the second issue from the providers of all these services, the switchers, the banks, the credit providers, is as the revenue stream is going down, whether it be interchange or other revenue streams, you somehow need to recover this. And, you know, I do get a sense that some of the regulators don't always understand the economics well enough, and I think there is a job for us, both on the regulators and the retailers, to explain those models. The money's not actually made out of the payment stream, it's often made out of the lending. And then I think last but not least is this whole piece of innovation. You know, I really do believe that as an industry, we've allowed ourselves to, you know, to get a bit comfortable in the old model, and we haven't innovated enough. And I think we heard some of the other banks yesterday talking about their investment in blockchain, their investment. I get a sense as an industry, we also need to join forces, because there's going to be some common standards, there's going to need to be some common investment, there's going to be a lot of time of putting the right people in the rooms together to make sure that this works for everyone. And it's no longer just about protecting the industry in terms of the banks and the associations. I think it's about protecting the ecosystem going forward. So that's quite important. So I think, you know, what's driving all of this change? I think if there hadn't been this move of all these disruptive players, all these techies and new payments players, we probably would bumble along, I'll be frank. Bank and the card association profitability does look very lucrative to everyone else, very attractive. I think it's only when the complexity, the security issues, the interoperability gets factored into the discussion that fintech world becomes difficult. And, you know, we'll show you a couple of videos in a moment or two where some of the biggest disruptors still ride on the Visa MasterCard rails, are still fairly and squarely within the old payments rails. But the reality is the consumer feels that he's got this amazing, innovative, and disruptive solution. And so the question mark is, you know, how do we find a middle path between the existing payment rails, the security protocols, and all of the fraud prevention mechanisms, and something that really meets customer needs? I think just to run through this, I mean, you can just see, I mean, any of you that have been to Shoreditch in London, to Silicon Valley, to Mumbai, most recently in Tel Aviv, there's a massive industry of clever young guys, all and girls, all with, you know, lots of degrees and lots of IQ and lots of MIBs, who's seeing this as an opportunity to become that unicorn billion-dollar company. We've invested in 8 of them, and these are unique guys. I'll give you an example of one. We found them in London, in the Innovation Hub in Shoreditch. The 21-year-old CEO was paid $1 million by one of those chaps on the first slide, not to go to university when he was 17. We're investing in his third company. He's worth hundreds of millions of dollars already. He sold the first two. And I said to him and his partner, I said, the only way that we'll invest in you, because we really like your concept of creating a virtual bank for the underbanked, is if you come and live in Africa. And living in Africa is not in Cape Town. Living in Africa is in one of our big markets, Ghana, Kenya, etc. Very interesting. These guys, very happy. Very happy. They've moved for a year, the whole team, and an amazing team of guys, you know. I mean, so the founder's the only one without a degree. The rest are highly qualified guys. There's even a doctor of DNA in there who's their chief coder. Can you believe it? And when I met with them, this guy said to me, I said, you know, you're one of the top DNA scientists in America. He's born and bred in Nepal, by the way. And I said, why are you doing this? You know, this is quite high risk. And he says, I found the blockchain and dedicated my life to it. And I'm going, sure. In my 20s, you know, I wasn't thinking about dedicating my life to the blockchain or to my career. Very interesting set of guys. But this is what's happening. And these guys are, you know, happy to take the risk. So that they live in Accra. They're there for a year. One of them is an amazing guy. He's married to a Victoria's Secret supermodel, which I think is quite cool. I probably wouldn't be in Accra and leaving her in Milan, but you know, that's another story for another day. But these are these kind of guys, and they're happy to go at risk. They're in their sort of early 20s to early 30s, and they've got a dream to solve a societal problem. That's kind of their starting point. And so I think increasingly those guys talking to the big investors in Europe and the US are finding, you know, investment that we as, you know, traditional bankers and payments practitioners probably wouldn't get. So I think very important just to see that. I think just working through this theme of, you know, what's driving this change. I think increasingly banks and payments associations are beginning to realize that you can't do it all alone. I think if one's going to try and do this with inside big legacy organizations or big legacy associations and just do it by yourself, I think, you know, that's going to be problematic. We don't have the nimbleness, we don't have the creativity to do this all by ourselves. So I think there's suddenly a need for us to partner with each other and with third parties. I think the roles and responsibilities of how the payment networks work are changing, and I think they're going to morph quite quickly. I think the financial models are under pressure. They're under huge pressure, and you know, that's going to force us to change. We're going to have to find ways to do stuff much cheaper that's going to meet customer needs much better. So that's very interesting. I think the regulators are moving quite fast. One gets a sense that they're coming with a very sort of consumer-centric, consumer protectionist approach, which I think is good, frankly. I think, you know, that's not a bad starting point. And I think, you know, they're under all sorts of pressures, both societal, political, to really change things up, to regulate differently. So I think that's one of the changes. I think the trust relationship is changing. So it's very interesting when you look at, you know, Uber, which is much vaunted. No one cares how the payment happens. You know, you just want to know that when you press the button, you can see where the taxi is, it takes you where you want to go, and you get billed and it's dealt. Ironically, it sits on a very old system of card rails, which is tried and tested. I think if that wasn't there, Uber wouldn't be quite as successful as it's been. If one looks at Uber Cash, which is the new service they're offering, creating all sorts of dramas, you know, all sorts of dramas. So, you know, I think that's quite important. And then the last piece, and I think it's a piece that's underestimated, is the change in this kind of risk profile and the fraud potential around all these new payment channels. And I think that's forcing us to really think differently. There's a whole industry of hacker groups like Anonymous that for commercial, for sociological, for political, and philosophical reasons want to disrupt our industry and hurt our industry. And so I think that's quite important. Now, this is the Wells Fargo Homes page. I mean, great retail bank, you know, big player. And what we've got there is all of the fintechs that are competing in their market with elements of their product offering and service offering. And I mean, you know, many of you have seen this slide before. I mean, it's absolutely phenomenal. And when you speak to the Wells Fargo guys, they say every day they're finding customers moving. They're seeing, debits moving to new startups. They're seeing, new payment channels. They're inundated with thousands of these guys saying, we need to use your back end. We'll be the front end. So, just to give you a sense, whether we like it or not, this stuff is happening. And, if every one of these takes a percentage or a few basis points of market share from a particular payment stream, I think, you're going to start finding huge pressure on the traditional networks and banks. So, just to talk about our RISE program, we realized sort of during 2014 that more and more in our discussions with our big retail clients that we're the merchant acquirers for, in discussion with just the corporate base that we deal with, who are looking for all sorts of solutions to pay suppliers, and in discussions with our IT and tech guys, that we just didn't have the ethos or the culture that was going to allow us to do a lot of stuff in the innovation space quickly and cost effectively. And so whilst it's very easy to have lots of cottage industries, and I think many of us have tried that during our careers, we just realized we've got to do something differently. And so in partnership with Barclays, we decided to set up a set of innovation hubs around the world. And we chose the locations where we felt there were the most innovative spirit and people wanted to be. So whether it's San Francisco or Cape Town or Tel Aviv or Mumbai or London, that's where we've set up these centers. And in essence, made a significant investment in trying to draw talent into our ecosystem to help us solve problems that we've got. Now, I'll talk a little bit about the people in the current in the current cohort. But what's been very, very interesting to us, and it's the cultural piece that's been astounding, is that all of these guys come from a world of abundance. They don't think competition in the sense that we've all grown up with. And so, in our first cohort last year, of the 10, 8 of them are working with each other. So, one's got a front-end payment system, the other one's got a blockchain processing engine, the other one's got something quite clever in terms of proximity. They've joined forces, and they build solutions together. And actually, when you sit down with them and say, so how's the commercials going to work when you roll this out? They actually can't tell you. They don't think that way, and you kind of have to help them through the cycle, that if this really takes off, you guys are going to have some good lawyers helping you work out how the profits are going to be spent and how the costs are going to be allocated. But very, very interesting for us that, strong recommendation to everyone. This kind of investment, is worth its weight in gold. And, see our MasterCard or one of our sponsors today, absolutely priceless. These guys and girls do stuff that we would never do. And so some of our early investments last year was in a company called Everledger, an Australian lady who decided that the provenance of valuable items like diamonds was, very dicey. So stolen diamonds are very hard to track, difficult for insurance companies. So she built a blockchain solution. So on the diamond, in microscopic print, is the blockchain code, and it's loaded globally. So when a jeweler actually wants to buy a diamond, they can check the provenance. And she has already become a unicorn, billion-dollar company, unbelievable success story, and now it's moving on to art, and it's moving on to all sorts of other things. And guess who the interested parties are? The insurers. So just to give a sense of the companies that we're involved in this year and that we brought into our syndicate, we've got one company that is building a solution for churches in Africa. And the guy himself is an IT guy. His father runs one of the biggest charismatic churches, in West Africa, more than 1 million members, and all of them pay tithes every month. And so he's built a blockchain app that securely takes the tithes, but also gives an audit trail to everyone to know where the money is going, what it's being used for, which families are being supported, which schools are being built, et cetera, et cetera, et cetera. And does a whole lot of other added value stuff, like daily greetings on a very personalized basis to help you in your life, etc. Unbelievable. So you're getting those kind of things right through to the most basic payment apps. So people get irritated having to pay for the ticket at, pay out at shopping centers and car parks. So these guys have built a solution where it's all automated, kind of the Uber of payments gates. We're in pilot with them in a couple of shopping centers in South Africa. It works a dream. Nice audit trail, very easy, no drama. And so, I think increasingly we're also starting to see that you've got to go outside of financial services. So we've got a few that are in the medical tech space. So, there's one of these startups that's developed a wearable that actually can tell you real time what your cholesterol is, what your blood pressure is, do you have medical risk without actually penetrating your skin. So, unbelievable. You meet these guys and they're all doctors of research. So I think the reality is we're playing in this. The common theme through all of them is they're looking for a very secure, because they're worried about fraud, channel of data, and they're all, almost without exception, working on blockchain. Various forms of distributed ledger and blockchain. So I think we just must be very aware that it's coming. And increasingly we're realizing it's time to partner with these guys because we couldn't do it ourselves. Now, in terms of innovation for innovation's sake, many of you have seen we've launched various forms of chat banking, and I think it'll ultimately be Twitter and Facebook and WhatsApp and WeChat, etc. Our sense is that you've got to take payments where people want to be. And so there's a whole generation that live on Facebook, that live in Twitter, that live in Instagram, and want to be able to do stuff while they're in that platform. They don't want to have to log out, go into another app, etc. And so, for example, something like our Facebook Messenger banking, where you can basically do everything. You've got a robot that can solve your problems for you, do your payments for you. We thought, let's try this out. Been inundated with volumes. Alvin will relate to this stuff. When you've got business guys saying we need more servers to handle volume, and we had quite a big server farm sitting behind these apps, it begins to tell you that this isn't innovation for innovation's sake. And so I think the big challenge going forward is the whole issue of security after adoption. I don't think adoption is going to be the problem. You're seeing more and more. Adoption is the easy part of this. There's a generation that understands tech, feels quite good about it, but they're all playing. It's very interesting. The transaction amounts are tiny. I think there are still very real fears that, is my money secure? Is it, can someone hack into this? And what are we about? So I think very, very important. But I think increasingly all of these channels that we're starting to open up to consumers are going to be about convenience. And, so watch this space, because I think we'll all be playing in it much, much more. A couple of emerging trends that we're seeing. So I think, the whole concept of invisible payments, increased regulation. I think more and more the regulators are going to feel the requirement to be on top of this industry. I think all of the cyber threats, I think, many of the South African banks, many of the global banks have had incidents in the last year which have really hurt them. I think all I say to anyone when they say, how's your bank doing? I say, there, but for the grace of God. Because I think there are a lot of very clever people, trying to get into this payment network and for the wrong reasons. I think increasingly we're starting to see from all the market research, the end consumer, the customer of all of us, wants the ability to work across channels. They want to be able to start something on their laptop at home and finish it on their cell phone in the car on the way to work, and pick up on a physical channel potentially. And so I think, this whole issue of internal interoperability, our own systems being fully linked to each other and integrated, is going to become quite important. Increasingly, the protection of data, ignoring our laws and ignoring our regulations, which I think, are going to try and protect this. The consumer is increasingly feeling that the world is impinging on his data or her data. So I think we're going to have to watch there. And then I think, last but not least, all of these new business models. And I think, we're starting to see some of these business models pan out and really generate good revenue streams. So let's talk about these new business models for a moment. I think, we're in a new world. We all get that. I think we're all seeing this disintermediation. But actually, the old rails, the associations, the banks continue to generate very good profits and good returns. And so I think, the message I want to give is that there's going to be a role for banks and associations for their capital forever. I think the piece that we're starting to realize is less attractive, and you hear lots of case studies about, peer-to-peer lenders. We own one. It's very, very interesting. You're starting to look at peer-to-peer lenders. They're very good at the platform, very good at, making this a very easy experience. It's much easier to get credit on those platforms than it is through a bank. And therein is a story. Suddenly, when interest rate cycles turn, you start seeing impairment levels, bad debt levels just going through the roof. And so I think you're going to find increasingly that lending piece of the puzzle is going to become, more mainstream. I do get a sense that, putting capital into something that gives you great returns is very easy. As soon as you start dealing with the complexity, you pull away. And so I think, these new business models are going to be, all about finding niches that are very profitable, that are low risk, and that improve a customer experience. And, all of those examples at the bottom of the page. So I think just looking at the past and the present, and the future, I think, is the present, is that, from a consumer perspective, it was all about the purchase. It's now about the payment. I think it used to be about, this piece of plastic that we carried around in our wallet, or plastics. It's now about how do I do it simply, whether it's through my phone, whether it's an EFT, whether it's a proximity payment. It was all about contact. There was a physical process you went through. It's increasingly becoming about, contactless. And I think if you increasingly look at, and I use Uber a lot, but, Uber, no one cares about the payment. No one actually even knows what's going on there. This whole experience is so nice, it just works. You don't even worry about that, so I think that's there. I think increasingly it's going to be about analytics and insight. We've got an amazing amount of data, all of us. If one looks at what we get through our acquiring networks, through our banking networks, through our card payments portfolios. But what do we do with that stuff? What are we doing with it? I think that's going to be a big game. It's all about physical in the past. It's increasingly being about virtual. I'm often astounded. People say to me, you've got this huge branch network. Most banks still do. Capitec, have great aspirations to be the biggest branch network in South Africa. And yet, I don't know anyone that goes into a branch anymore. And so who's going into these branches? And I'm not sure what the other banks are like, but I still make 90% of my sales through my branch network. Now the question is, how long will that be? Is there a point where your automated sales platforms are so slick, your credit granting processes are so slick that you don't need to go into that physical presence? I'm not sure, and I think that's going to be part of our balance. What we do know, though, is the consumer, with some exceptions, wants it to be slick and easy, but still wants the ability for there to be some contact, some human contact where they get into the difficult issues. So I think that one is difficult, and that's why I say we're going to have to distinguish between these added value empathy transactions and what we call the non-empathy transactions, which could be virtual and contactless. I think all of us are moving from a world where we always talked about products. There were cards, and there were home loans, and there were vehicle asset finance, and there were personal loans, and there was this sort of product siloed mindset where we sold products and we sold solutions. To the point now where the consumer is all about solutions. The product really isn't the key issue for them anymore. So I think that's going to change things. I think this independence and this competing at all costs with one another is turning into a world much more of alliances. And I do understand the competition law, and I do understand the antitrust law that certainly we can't be colluding. But I do think that more and more there are going to be standards that have to be set that we're going to have to play a much bigger role in. Often chatting to Walter and Alvain, we talk about the caliber of people that we have on our forums. We're going to have to lift that game, because I think this has become much more complicated. I think the regulators need to be and are becoming much more involved, and so the quality of that debate needs to be lifted. So I think that's important, and we're going to have to partner more with third parties that are outside of our world. I think we're going to move more and more from traditional currency to cryptocurrency. And I want to give you an example which really shocked me. I was in a meeting a few weeks ago with SAB Miller, and they were talking about their businesses in Africa. And the guys were saying to me, it's so difficult to get dollars in Nigeria now that they're paying all their suppliers in Bitcoin. And I was like, what? And they said, yeah, they actually showed me. They've opened up Bitcoin accounts for their key suppliers because they can't access hard currency. And then I went to see one of these suppliers, and they said, yeah, we've got a Bitcoin account, and we get the Bitcoin in, we charge a premium, and SAB's built a premium into their payment model, and we then convert it into rand. I was quite astounded. So, let's not be naive around this. I think that these cryptocurrencies increasingly are going to become more of a reality in our lives, and are going to be something that, as this industry, the payments industry, and as banks, we're going to have to get to grips with. And I know we've all dabbled, and all of our banks have got teams working on this stuff, but I do think that increasingly, particularly on a continent like ours, this cryptocurrency reality might be happening faster than we realize. And then I think the whole issue of the PAN being exposed to the PAN being tokenized, just because of all of the security issues around it, is going to become a reality. Now, I've talked a lot about Uber, but and many of us have seen the success story of Starbucks and what Starbucks have done with their payment app. As many of you may know from the articles, Starbucks, in fact, in some markets, has shown massive market share gain by introducing a payment app, which has made it easy to buy coffee and their products. So here's a quick video just around how that works.
Now you can order and pay for Starbucks on your phone and pick it up at the store. Just go to your Starbucks app and press order. Find your favorite drink on the menu. You can customize it with a number of shots, toppings, or flavors. Maybe hazelnut. How about a bite to eat? Bacon. Your order will be sent to the nearest store, or select a different store to pick it up. Confirm and pay, and you're good to go. When you get to the store, no need to wait in line.
Mobile order for Alex?
Just come pick up your order.
Here you go. Have a nice day. Thank you.
No time, no line.
So I don't know if any of you've got that app, but you should download it when you're next in the UK or the States. Very interesting now, you have got your picture on it and your first name. So when you arrive, they see you and it's Craig, your cafe latte, whatever it is ready. The whole experience is just unbelievable. What was intriguing for me, when we delved a little bit into the Starbucks one, thinking it was, one of these new payment innovations, is once again, the rails are Visa, MasterCard rails. It's the old 4-box model, but the experience that's been layered on top of it is just unbelievable. So, I think the message that we're taking in internally, and I think as an industry we need to say, is that, this payment innovation is all about driving transformational experiences. It's not change for change's sake. We're not disrupting ourselves because it's a cool thing to do and it's the new buzzword. I think if you can develop payments solutions that give all these benefits to the consumers, to the merchants, and to ourselves, I think it becomes win-win. So I think just in terms of our guiding principles, we're saying let's not invest in anything that consumers aren't going to adopt, and what's going to make them adopt it. It's got to be simpler, and it's got to give them this instant gratification, fast checkout. I think that's absolutely crucial. It's got to give them great security. I think as soon as there's a question mark around security, and we know there's the question marks around internet banking, etc., as long as the security is absolutely clear, I think they'll adopt it. It's got to have a lower cost to use, so that in turn comes with a challenge. It's got to have ubiquitous acceptance. So I think, it's probably one of the reasons in my heart of hearts, I think the traditional Visa, MasterCard, payment rails, some of the stuff that happens in the corporate world will exist for a long, long time. And you've got to have a consistent experience. I think third parties will provide it if it gives them better security, it gives them good economics, etc. And I think merchants will adopt it frankly, if it speeds up the till line and it gives them, better revenue streams or lower cost. So, I think increasingly we're focusing all of our energies on trying to solve for those three groups. We don't any longer look at just retailers. We don't any longer just look at our customers. We're trying to say that whole ecosystem has to be dealt with in answering all of this, and I'm sure most of us are in that movie. Now, I think it would be remiss of me if I didn't talk a little bit about cash, because there's lots of really cool stuff happening, and there's lots of real innovation coming into our industry. But cash is still growing in Africa, in leaps and bounds. We're seeing, 10% in some big markets. Even in South Africa, cash is growing. Now, whether we like it or not, we have a huge informal sector across this continent. I think, honestly, if we knew what the real size of the economy in South Africa was, by doing a real demographic study, I think we'd be astounded. I think we may actually be ahead of Nigeria again. We've recently done a study in a single township. And what we did is we got people to go house to house and map on top of Alexandra Township exactly what was going on there. And the red dots were businesses, and then we actually got down to the industry, from the oldest on the planet right through to the spaza shop. And it was absolutely interesting that whole demographic, that whole suburb was red. There wasn't a single home there that didn't have some kind of commercial activity happening out of it in the backyard, And so I think the reality is that is the cash society. It's a society outside of the tax net. It's a society outside of the formal banking net to a point. And so, I think we've all got to think this thing through. You can see across the banks, across this continent, ATM deployment is stalling. People are all saying everything's going digital, so let's not invest so much in branches, let's not invest so much in ATMs. The reality is cash is growing. It's a very expensive commodity for us and the regulators, but it's growing. And so I think that increasingly in the space of innovation, we're probably going to all have to think about cash as an integral part of this for a long, long time. I don't think we're going to become Singapore on Friday, where suddenly everything moves on to plastic. I think we're a very different society. Our economy is totally differently structured. And so, really just a view that, whilst digital is easier, it's very interesting in the market research that we do. A lot of people don't trust it, and I think that's going to be, with us for a while. So just to talk a little bit about it. Nearing the end, but I think just to talk a little bit about the rise of proximity payments. I think, this is all about convenience. I think as we've seen with things like, Google and Apple and Samsung, adoption is taking longer than I think everyone expected. I think, just having your credit card or a payment app on your phone and tapping it at the till isn't rolling out as fast as we'd have expected for a couple of reasons. The merchant accepting infrastructure isn't always there, and I think there's a trust issue. So, but just to show you, it's a huge, huge issue, and I think over time, this will be the payments this will be the future of the card industry. I think, increasingly, many of the banks have this. We've recently rolled out, MasterPass, and I think as people begin to trust it and as the acceptance network, rolls out, I think we'll be good. I think we've all talked about mobile first. I think the future channel of choice for consumers and probably retailers is going to be the mobile phone. We all live with these things. I think increasingly some form of wearables. I mean, my Chief Digital Officer, Ashley Veazey, actually has his payment chip embedded in his wrist. I mean, taking it a bit far. There's a bit of, Nostradamus there, but very interesting. I mean, that stuff that, I thought was going to be 100 years out, guys have actually got this and they're starting to test, does it actually work? So I think this will be a new trend, and I think it'll morph, I personally am not sure that it's going to be all the wearables. I think the phone is going to be the one that's ubiquitous. I'm not sure everyone's so excited about having a Fitbit that's also measuring their, everything else. So let's wait and see. And then payment security. I mean, for the bankers, our sort of recurring nightmare. definitely becoming much, much more sophisticated. You know, from the old days of card skimming and clever scams, you're now down to highly organized syndicates, you know, with incredible tech skills, you know, who run themselves as businesses. And, you know, so a real issue. I think one of the key issues for us as an industry is that trust that we have with our customers. They do feel that their money is safe. And I think, you know, we're going to have to safeguard that at all costs. And I think, you know, the investment all of us are going to have to make individually and collectively in cybersecurity, working together, whether it's through Sabric, whether it's through PASA, I think is going to be crucial. I think mobile proximity payments is going to come with its whole set of challenges. As cool as it's going to be from a consumer perspective, I'm really, really, you know, worried. And so my sense is, to pull it all together, this need for mobile, this need for digital, this need for proximity payments, all this convenience that our consumers want, the reduction in costs that our retailers want, you know, I'm not sure that we've all got our heads around where do we all go next. And so, you know, just a little video from Google, and once again, you know, trying to meet a customer need.
Let's face it, paying for things isn't always easy, especially when there are more important things to take care of. So we created Hands Free, a simple, secure, and convenient way to pay at your favorite stores. You can pay with Hands Free without taking out your phone. Just tell the cashier you'd like to pay with Google. The cashier will then confirm your identity. We'll take care of the rest and send a confirmation to your phone. Your payment is secure and protected by Google. Try Hands Free today. It's the simple, secure, and convenient way to pay.
I think no surprises, but I think we do know that the Apples, the Googles, the Facebooks, and these guys have huge balance sheets. And so I think let's not be too surprised that they start putting real capital behind some of these, not running on the old rails, trying to create new rails. And so, you know, that's where we are. So I think in conclusion, just, you know, a couple of thoughts from ABSA's perspective and Barclays. You know, the customer remains the reason why we exist as a bank and as an industry. And, you know, I think we need to just understand that they've got much more choice than they've had in the past, so we've got to give them more priority, and I think they've got to be brought to the center. I think we need to adopt a much more inclusive approach to solving payments industry issues. I think it's time for us to join forces with regulators, with third parties, with ourselves, and understand that there's some stuff we're going to compete with, and there's a whole bunch of other stuff that we better get our ducks in a row as an industry. So I think important. I think that all of us are realizing that this whole digital revolution that's happening is forcing us to become much more agile as organizations. And the traditional governance and bureaucracy, et cetera, is going to have to morph to meet those needs. At the end of the day, it's all about a better customer experience, but it's got to be a better customer experience that's safe, that's compliant, that meets the regulations. So, you know, not easy stuff. I think we're going to see change like we've never seen in the next 5 years. You know, just sitting with these youngsters that we've got in our incubator in Cape Town is quite scary, because they're thinking way out of the box, sometimes naively, but sometimes, you know, in ways that actually are going to be very disruptive. I do think that our merchant, retailer, and customer education is going to be quite pivotal to going forward. It's very easy to say push down costs, but when the fraud, when the bad debts, when the payment disruption happens, I think people will come back and say, you know, why did you do that? So we've got to do that. And I think, you know, as we've seen, you know, in the last few years, the payments world is changing really, really fast. And, you know, hopefully you'll see that change in our bank. Thanks very much.
Greg, I just wanted to say on behalf of the organisers, thank you very much, and a small token of our appreciation as well.
Great pleasure.
Thank you very much, sir. Real pleasure
Thanks,
to have
Mike.
you with us. Thank
Thanks,
you.
Mike.